RIN-TV coverage of the 2015 NAPSLO convention is brought to you by the Lexington Insurance Company.
The tropical storm season has been rather quiet this year, but what about other Nat Cats? And how will data management and technology affect risk and claims management going forward? Here with insights is Joe Louwagie, an AVP at Property Claims Services, a Verisk Analytics business.
The 2015 cat season continues a trend that we've seen for 2.5 years, which is higher frequency and not as many big events. The last really big event was Moore, Oklahoma tornado of 2013, but really you have to go back to Sandy in 2012 for a major event. PCS has designated 33 cat events in 2015, followed by 2014 that was 32 events, both of those well above the historical average of 27 events. In terms of hurricane season, we still have a couple weeks where the percentages increase of a potential major hurricane, but very soon here, daily the percentages are decreasing, and it's looking like the major El Nino that is in the Pacific is going to come true in terms of the predictions of a sparse hurricane season. Our message to the industry is the inevitable will happen of a major event, so to continue the diligence and robust cat planning and response preparation. Let me start with the reinsurance and capital markets. The lack of a major event means that balance sheets are strong, and in fact the lack of an event for several years in combination with excess capacity, with robust capital, means that cedents are firmly in the driver's seats in terms of rates and terms. For smaller carriers it's a little bit different. Even with attritional catastrophes, with this type of frequency, it puts pressure on aggregate covers, and with regional and local carriers, due to a concentration of market share, it can have a disproportionate impact to localized catastrophes. Our focus at PCS is to ensure that we're reaching out to the mid-market to accurately include them with cat designation and to have the mid-market well represented in our estimates. The natural catastrophe perils that receive the most focus are those that happen with the most frequency. Convective weather is about 80 to 90% of catastrophes annually, so perils like hail and wind receive a lot of attention. In the last couple years, winter storm-related perils has received a lot of attention. So for all of those, very high level of technical competence within claims, superior customer service with refined cycle times, and efficient non-allocated or allocated expense management is really important. The broader industry, due to favorable market conditions on terms, are focused on extreme perils such as volcanic eruption, meteorite impact, tsunamis following earthquakes. The challenge is the lack of data. So even with favorable market conditions and including these into programs, accurately developing the expected loss is the challenge. Access to and the accurate use of data is of critical importance, of course, to underwriting and rate making. What's changed in recent years is who houses that data. Traditionally, insurance companies and industry entities like ISO have provided sufficient data for underwriting and rate making. What's changing is technology and who houses that data. Things like smart home devices and exchanges like the Verisk Telematics Data Exchange. It's going to be of critical importance to carriers to get access to that data to continue to be able to use it appropriately for underwriting and rate making. In terms of claims, it's changing the industry. Technology has sparked innovation. The advent of drone technology has led us to the inevitable race of being able to diagram exteriors of homes through drones. When you consider that there's now availability of mobile apps to diagram the interior of homes, and carriers have started to use FaceTime to scope the interior, it's changing the frequency by which claims organizations need to send out an adjuster to do a field inspection. What that's doing is causing a strategic and staffing review at carriers as well as independent claims adjusting firms. 2015 and really going into 2016 is an important time for the E&S market. From a PCS perspective, we continue to align with the market to ensure that the E&S component of our estimates is accurately reflected. We work broadly within the E&S market to benchmark to industry standards and also to decrease basis risk from the PCS estimate. We believe that now is an important time for E&S cedents with favorable market conditions to continue to access the capital markets.
For more of our coverage of the 2015 NAPSLO convention, visit the RIN-TV On Demand Library.